Okay, we're going to get started. Hello, everyone, and thank you for joining us for today's session called Planning and Execution, the Engine That Drives Growth, presented by Jozef Hubburmin and sponsored by Fresh from Florida. And a bit of a preview, the words engine and drive are going to be important, so you'll see what I mean as we get into it. My name is Greg Ogiba from Grow Advantage, and I'm happy to be hosting this session today. We have 1 hour booked, the majority of which we'll leave for Mr. Hubburmin, and we will do our best to leave some time at the end for Q&A. So as questions arise, please drop them into the Q&A box at the bottom, and I will see them, and at the end, if time allows, I'll get to those. So thank you again for joining us, and thank you to our sponsor, Fresh from Florida. So with that, let me introduce Jozef. Jozef Hubburmin is currently the CFO at Fresh Direct Produce, a major importer and distributor based in Western Canada, but with reach across the whole country. He is a graduate of the University of Toronto, which is not too far from where I currently sit. He earned his CMA designation in 1992. And before arriving at Fresh Direct, Jozef had a number of senior positions at companies such as Smart Centers, where he was part of the team to bring in Walmart. So whenever you see those cute little Smart Center penguins, you have Jozef to thank for that. He also helped with the expansion of Shred It into the United States, among other companies that he's been part of, either full-time or as a board member. So it's a pleasure to have Jozef here today talking to us. And now I'm going to turn it over to Jozef in his presentation called Planning and Execution, the Engine That Drives Growth. Jozef.
Thank you, Greg. So where do we start? Well, first of all, we start with culture, because if you don't have the right culture, anything that I discuss further down about strategic planning or business planning will not get executed. And this is about, getting that engagement from your team, being involved in the industry. And of course, our industry is very much involved with gratitude and giving back. And let's get all our employees involved. And that's some of the things that we strive to do. And it was interesting, my wife, Valerie, and I, we met Steve Forbes just before the pandemic. And one of the things that Steve mentioned was business's mission is to create happiness. So why don't we start with our employees first and our teams, and then of course our customers and our vendors and our partners. And then again, where to start? Strategic planning is a cycle. And what happens when you do that cycle is you're building a comprehensive plan. In the fourth quarter, your management goes away on a retreat to get the high level information. And then you're building an annual budget and plans to execute for the year. And then each month or each quarter, your key team is meeting to execute on that plan. And once again, it's a continuous cycle of planning and execution. And so here's an example. So Fresh Direct has a September 30th year end. So in the fourth quarter, our management team is getting together on a retreat, coming up with what are all our objectives for the next year, and putting a concrete plan in place. And also, we're then setting off into doing our budgets and building our budget. And then the budget is approved before the new fiscal year starts. And then throughout that fiscal year, you're having checkup points every month, second week of the month. And then once again, as you get to the fourth quarter, you're now reviewing you're going through your next strategic plan to update for the following year. So here are the features of a strategic plan retreat, okay? So first off, there's your mission, vision, your core values. So for Fresh Direct, fresh is our core values. Focus, relationship, enthusiasm, sincerity, and high standards. And of course, our mission a number of years ago was to become a leader in Western Canada. And our new mission, of course, has changed. We want to be a leader across Canada. And our vision is to make a healthy difference. And we want to make that healthy difference throughout North America. And that is the vision for our companies a little further out. Now I'm going to explain a few of these other features. Okay. Review of the business environment. So you want to start off, you want to know what the size of your market is. And you want to know what is your company's share of the market, and then where do you sort of see your company's share of the market in 5 years. And you also want to consider trends. So a number of years ago, we were looking at trends, and more market share was going to chains, tighter food safety restrictions, ethnic produce was growing in market share, and consumers want to be protected and educated. So these are just some examples. So when you're reviewing the business environment, these are some of the things you want to consider. And here I want to take you back. I joined Fresh Direct in July of 2010. June of 2010. And then in early August, we had our first retreat. And it's interesting, I look back, I went, well, gee, size of the market, where am I going to find that? Well, I went to the CPMA's website and I found that there was total grocery information from 2005. And quickly I went, okay, let's take this and let's do an estimate. Let's bring it forward with a 10% growth rate for 5 years, say. A little bit 1.5 or 2, close to 2% growth per year. And then fruits and vegetables was about 17.3% of grocery, and then 65.4% of that was fresh fruits and vegetables, and came up with this. And believe it or not, and by the way, you can see the old logo of Fresh Direct there from back in 2010, because this is the actual market size that we used back then, is that we actually made a decision to actually open up in April of 2011 our Calgary office, which is now, back then it was about 16,000 square feet. Today, it's close to 70,000 square feet in Calgary, and quite a going concern. But this actually was part of the reason why we made that strategic decision. On to SWOT analysis. What you want to do is you want to look at the internal factors. Where are we strong? Where are our weaknesses? Can we build on our strengths? Are there certain weaknesses that we can overcome for the next year and the next few years? I guess back in 2010, we said, well, how can we improve our reach into the prairies? Well, we don't even have a presence there, so that's a weakness. But then also there's an opportunity. So we want to look at our opportunities and threats. We'll look at threats. We look at the competitive environment. We look at legislative issues. And we also look at the economy in general. And if you think about it today, what are some of the threats? There's supply chain issues, and there's also inflation and potentially stagflation affecting companies within our industry. But what are the opportunities? And even when you are facing headwinds, there's always opportunities out there. Then we look at customer identification. You want to segment your customer base. So we look at it by customer type, independent stores versus regional chains and national chains. We look at it by geography. And we also look at the size of the customer. And then think about it, when you're arming a sales rep to go out there to look at bringing in new business, when you build that sales kit, are you thinking about those different customer types? So if they're going out to see an independent store versus a regional chain, what is their approach? So some of the things you want to identify within customer identification, what are all the similar needs of all your customers first? And then within those different types of customers, what are the differing needs? What's the difference between your approach or your proposition to an independent store versus a regional chain versus a national chain? They can be very, very different. Also, you want to look at your margin analysis. And I want to apologize for the sheet. At the bottom, it says contribution margin. It shows dollars. It really should be percentage rather than dollars. Okay, because 16% or $16, what does that mean? It should really be a percentage of your sale. So and also you see the number of products sold, the volume. And so you look at some of your items, some of the things you want to focus on building those programs that have high volume and high margin. And that's what you see there when you see the beef, the stars, the beef tenderloins, and so on. Somehow, some of the plow horses may be useful because remember, sometimes you need to have that sales mix in order to properly service the customer. You want to watch where that contribution margin is. You want to make sure it is a reasonable, at a reasonable level. Then you want to do your goal and objective formulation. And you start off with your key targets. These are key result indicators, KRIs. Okay. Sometimes people confuse a KRI with a KPI, a key performance indicator. Revenues, gross margins, net margins are not key performance indicators. They are key result indicators. Key performance indicators are a little bit more challenging. I would say that some of the key performance indicators that we look at are: how often is a customer visited? What type of feedback and type of market intelligence are our sales reps bringing back to our buyers when they do those visits? Those are key performance indicators. How often do we get on ad with certain regional or national chains? What proportion of the ad is our product that we're selling to, say that, say TNT, for example? How much of the proportion of that ad are we on? Those are what we call KPIs, because the KPIs are what drive performance and drive the KRIs. And this is a very good book about key performance indicators. If you're a little unsure about your industry or your positioning in the produce industry, you really want to, this is a very good book to help you develop KPIs, and you'll find that it'll be very useful. And also, of course, you want to check out your org chart, and you want to make sure that as part of your strategic plan, that where do we need to hire up? Do we need more people in finance? Do we need more salespeople? Do we need more marketing? And do we need more buyers? What have you? That's also pretty key to your overall plan. So, strategic planning, budgeting phase. So, as we move forward, we want to make sure the budgets include a sales budget, a marketing program, a purchasing budget or manufacturing budget if you're doing fresh cut, for example, or repack, departmental burden budgets, cash flow projections, and an overall summary budget. And all budgets must be completed and approved before the year end. Okay, and then of course you have your strategic planning checkpoints, either monthly or quarterly. You're meeting with your team. Now, this is not a dog pile because someone's not meeting target. This is about the team pivoting and working together, because you're reviewing your actual performance versus budget. You want to find out, are we doing well? Maybe we're doing well, and maybe we can revise and say we can even do better than budget, or we can have what we call a second or third quarter reassessment or projection where we can try to even push more performance. It's always possible. Or do we need to get back on track? And again, this is not about dogpiling that say the sales manager didn't meet their target or the operations person didn't hire enough people, but how can we work together to help be successful? Because at the end of the day, you don't want to be a team of all-stars. You want to be a championship team. It's very different. A championship team wins is where they pivot together to work together to help each other, where someone's stronger in one area and someone's weaker in the other area, but then you work together to resolve issues and move forward. And we also want to know how we're doing on our operational objectives. Did we get that bagging machine on time? You know, and so on and so forth. As strategic planning benefits, you're setting a direction. Everybody can follow together. Everybody on that management team knows what they're doing, what the whole team is doing. The managers, they all own the plan rather than just following a dictated plan. Plans always often get the team to stretch and problem solve. They help to bring things back on course if you're off. It gets everybody focused, engaged, and energized. In fast growth situation, it helps keep everyone calm, builds morale, because everyone knows, oh, we're doing so much. You ever hear that? We're doing so much, but if you have a plan, it keeps everybody relaxed. And the plan helps the company and its team decide what relationships are the optimum to develop. I will tell you, everybody's getting calls these days. Everybody else has an agenda, and you pick up the phone or whatever, or you hear a voice message, and the first thing you should be saying to yourself, does this relate to a strategic objective to help us meet our goal or not? Or is this a sales call with somebody else's objective and it isn't in alignment with what you're doing? So you really want to, but you can't have that if you don't have a strategic plan in the first place that can help you make those decisions. Strategic plan tips, excuse me, tips. Use an experienced facilitator, preferably someone who knows your industry. Make sure that all management is involved and engaged. Stick to the discipline of the cycle and just do it. You might find that in the first year you're kind of going like this with training wheels or with the steer, you know, with your bike as you get going. But you will find each year as you do it, you will improve on your planning, and your team will be all that better for it. So we talked about strategic planning. Now we're going to talk about executing strategy with the right business plan. Okay. So what's the purpose of the business plan? Okay. It's a detailed plan to operate the business and guide management's execution of its strategies. And if necessary, it's also a sales document. It can be a sales document that will encourage a lender or investor to write a check, the financing purpose. So if you ever heard about business plans out there, really what a business plan is a sales document. So how does the business plan align with the company's strategic plan? So the strategic plan includes the company's plans over the next 5 to 10 years. The business plan typically will be detailed monthly forecasts and supporting narratives to meet the strategic plan targets for the next 3 to 5 years. Business plan should include monthly line-by-line plan budget, projected sales and expenses, along with balance sheets and cash flow statements. You want to make sure that you've got, your sales there, you got your gross margin percentages, your net operating income targets from the strategic plan, and I would dare say EBITDA. Everyone familiar with EBITDA, earnings before interest, taxes, depreciation, and amortization? It's basically the cash flow from the business. Also includes narratives related to all sides of the business, including sales and marketing, purchasing, operations, R&D, and finance, accounting, and admin. Outline of the business plan. So first, you should have your executive summary, the story of, key success factors, detailed plans, and then your financial projections. So right away with your executive summary, you want to have your value proposition for both the company and its products. How does the company differentiate itself from its competitors? So right away, this executive summary should be no more than a page, maybe a page and a half if. You want to have your major plans and initiatives, how much those plans are going to cost, and the financing requirement they ask. So it's like a sales document. Right away, you want to let that lender or that investor know how much you're asking for. Okay, and then you want to have the story up. It's interesting. I worked in corporate finance at Woolridge Mann for a little while, and I remember talking to a private equity group, and I was talking to someone, and she said to me, I read all these business plans and they're boring. I says, really? He says, yeah, I don't want to hear a story. And I says, really? So when I started doing some more business plans, I says, I think I'm going to include a story. I'm going to, right after the executive summary and right before I get into the rest of the factors, the key elements of I'm going to put in a story. A one-page story tells you a little bit about the management team, about their past successes, how they've overcome challenges, gives the investor some comfort that the team is execute. They've been on this camping trip before. And that story will entice the reader who you want to write a check to finish reading the document. So key success factors, I like to use the car analogy. So think of, this is my my Mustang. I've traded it in since, but it's an awesome GT convertible. And I was thinking, what is a good way to help people remember and understand various different parts of a business plan? Well, I like to use this car analogy. And right off the top, the management team, it's all about the steering. Okay. So investors invest not just in good ideas, they want a strong team. And that strong team has to have a good leader at the top. And also they want to make sure that there's good bench strength there. You know, they've got a good CFO or controller, strong VP of sales, strong person in operations, if necessary, R&D and procurement, etc. Then you want to look at the engine, your product or service. What are you selling? And what is your selling proposition? Where are you positioning yourself in the market? And why is that going to make you successful? And what is the product mix? And is that product mix complementary? Then you're looking at your access to the market. This is where the rubber meets the road. Who are you selling to? First of all, your size of your market. How much of this market you're currently selling to? And how much of this market do you plan to sell to within 2 to 5 years? You want to make sure that you include both a push strategy about your sales teams and a pull strategy, your marketing programs. And then you want to look at supply, gas in the tank. What are your key supplies? What key supplies do you need? Your raw materials, finished products, other. How easy is it for you to obtain supplies? I think today, this is probably even more key component to your business plan than ever before. You look at the logistic challenges we have to bring product to market and getting access to various different products. What is the quality of your overall supplier relationships? And I would say key vendors, not just your produce vendors, but who are your logistics vendors? You know, can you count on them? Are you getting enough trucks? Are you getting enough containers? Are you getting a reasonable pricing on those trucks and those containers compared to your competitors in the marketplace? So that's, gas in the tank, even though we all know it's kind of going up. In Vancouver, it's $2.39 for regular gas right now. So it costs a little bit more, but how strong are your relationships with your suppliers? Not even go further to say your packaging materials and your access to labor. And how do you make profit? That is the transmission, converting power to thrust. Okay. So you really want to understand what your average selling price for each product is. Are you right now with this inflationary environment? Do you understand all your costs? Where are the hidden costs that you're seeing right now that you may not be aware of, that are just because we're in such a, I guess for the last decade, we had cheap money and we had low inflation. Things are changing. You know, have you worked out your contribution margin? Do you need to go back and recalibrate? When you send product in town versus out of town, and you got to consider the cost for you either to deliver yourself or using third party. Have you considered all the costs and made sure that your standards on your contribution margin is there? And you want to identify expected volumes for each product and show your break-even analysis. So at what point are you making profit when you're sending out, what are your minimums when you're sending to various different stores? So on. You should even know what's your minimum that a store needs to buy from you to even break even or to make your targeted margin that you expect from those items. Then you want to look at your locations and your facilities. This is the exterior, interior styling of your sports car. Where are the facilities located? Are you near transportation routes? What is the configuration of the office, warehouse, and plant facilities? Set up the operations, including the SOPs. What are the costs? Are you buying versus leases? I can tell you in different markets here, that with the inflationary environment we're having, leasing costs are going up. And in Vancouver, it's tough to find industrial space, so there's a lot of things to think about. Intellectual property, onboard electronics, okay, within your sports car, okay. Do you have a library of IP submissions, or is it more or less your trademarks? Fresh Direct, we have our Simply line. We have Islands West that has their Island Fresh Cuts. They also have Kale Crunch. These are trademarks, and they're quite popular items in certain markets. Where is your IP registered? Is it in Canada? Is it US, overseas? And it depends on where you're selling. And what are the costs to register? And also, what are your potential challenges and the costs to defend if necessary? Okay. And then comes financing. So financing is basically the key for the ignition. So if you have all these key success factors ready, and the reader is looking at this and say it's a bank looking to lend to you, or it's an investor looking to buy into the business, how much in total financing is required? It's based on the cash flows from the plan, and you want to tell what are the uses for capital expenditures, plant equipment and so on, trucks, working capital for growing the business. And by the way, your ask should be a lot more than your need. Again, I will repeat, your ask for financing should be more than what you need. There's always an oopsie. You need about a 20% buffer in terms of what you need to run the business and in terms of your ask. Okay. You also want to let, if you're approaching an investor or whatever, what financing is already secured or secured conditionally on raising more equity. How much equity is required to enable the business plan? And for debt financing, you want to make sure you present your financial ratios and covenant calculations. You say, well, the bank hasn't given me that. Well, you should be working these out already. I mean, imagine if you're going to your bank and you actually say, hey, I've stress tested and I've figured out my financial ratios and covenant calculations, that they're probably going to say, hey, these people are really thinking about their business. We should probably bend a little and maybe give them a little more opportunity in terms of lending. But at the end of the day, from this business plan, for the investor or the lender, basically they should look at this. We just put the key in the ignition and the sports car takes off on its own. Detailed plans. Okay, so furthermore, you want to talk about the market, its projected growth over time, you want to do your competitive analysis, customer segmentation and needs analysis, product mix analysis, break-even points, marketing program details, operations, plans to develop intellectual property. And also you want to provide risk to the success of the plan. The bottom there is just, well, we're planning on doing this, but this could happen. And if this happens, this is how we're going to mitigate that. So you might mention about 2 or 3 different things that could throw your plan off. And then you say, oh, by the way, we got it covered. We're going to do this or this or this. Okay, in order to deal with any headwinds that come our way. Then there's your financial projections, and they should include annual summary of your financial results, 2 to 3 years of history, and 3 to 5 years of projections. And you want to show them monthly. You want to show the projections monthly, and you want to show them from an income statement. You start with there. You want to show your balance sheet and your statement of cash flows. Okay. Going forward, use the plan. Now, if you're using a business plan to raise financing or what have you, and you haven't got it yet, still use the plan to track your progress monthly or quarterly with your management team, and use the results to change direction or take advantage of opportunities that present themselves. In fact, when you have a plan and then an opportunity presents itself, it's easier to take advantage of that opportunity if you already have a base plan in place. And so use the plan when you go forward. Now, focus on what's out front. So here you can see these two pictures out of this Mustang. You can see I'm looking out the front window, and now I'm also looking on the second picture, I'm looking at the rear view mirror. So when you do your monthly variance analysis, it's a good idea to look through the rear view mirror and say, well, hey, we performed, this is our actuals for this month and year to date. This is where we're at. And this is what we did last year, this month and year to date. That's looking through the rear view mirror. And yeah, it's nice to look at that. But what's more important is that you're looking out front, that you're looking at your variance analysis to the budget, to the plan that you've set with your team to go forward. That is most important. And you want to track on that within that month and year to date, how well you are on plan going forward, looking frontways. And I think that's about it. Is there any questions?
Excellent. Thank you, Joseph. Yeah, we're ahead of schedule. I do have a few questions. People have texted me in the chat, which I appreciate.
Sure.
And so I'll read the questions, and the most important question I'm going to start with first is, you said you traded in the Mustang. So what did you replace it? What did you get in its place?
Well, I had a strategic plan.
Of course you did.
Yes. Before I bought the Mustang, I wanted to buy a Mustang for 3 years. And then 3 years later, I was going to buy a Camaro. And then I wanted to buy a Corvette. So it was a 9-year plan. Okay. So 3 years I had the Mustang, loved it. And then I traded it in after 3 years. I traded in for a black red line convertible Camaro. Just loved it. Beautiful car. And then COVID hit. Two things happened. COVID hit, and I noticed that by the way, I drive standard. I'm a purist. And I noticed the new Corvette in 2020 didn't come with standard.
Ah.
And so, I had to pivot because the environment changed. And so COVID in March, actually in April of 2020, car sales dropped by 75% in Canada. In fact, they dropped lower than, they were at the lowest level since 1952. So I said to Valerie, I says, I've only had the Camaro for about a year and a couple of months, maybe a year and a half. I think it's time to buy the Vet. And so I found myself a Grand Sport convertible, 2017, with only 20,000 kilometers on it, and all the bells and whistles as everything. And I managed to trade in the Camaro, and I think they probably lowballed me a little bit on the Camaro, but the differential was so little that I think I barely touched my payments and just slightly extended out my debt. And I think it was paying back then. I think I was paying about 3.5% on the Corvette at the time, and so I call it my Covette because I think I did well on it. But so I had to pivot my strategic plan on it.
I like that you've incorporated the theme of today's presentation: strategic plan, pivot, variances into your car, your car's strategic plan. So thank you for sharing that. A few other questions here. One is on the finance. You mentioned that there should be a buffer, approximately 20% is what you said, between what you need to operate a company versus the financing that you're asking for. What's that 20%? What does that represent? What goes sort of wrong in there that you need such a buffer?
Comfort. S happens. Things happen. You could have. Well, look what's happened in the last year, where we have to pivot, we have to make changes, and we have to add on more costs. Because of how containers are coming from overseas. Stuff happens, and you always need to make sure that you give yourself a bit of coverage. Your lender will appreciate that you've actually put in a contingency in place, because they're thinking of that. And if you're just saying, oh, I just want just enough money just to get by, that's not a good way to run.
Okay. I got you. And when you're presenting a business plan and trying to raise capital, I don't want to use the word inflate, you'll leave a buffer in each transportation, each component of running the business, or will you actually represent it on its own, saying, hey, we need another 20% just in case?
Just what we would do is we would look at the whole thing and we would say, okay, we need a little bit of a contingency here. And sure. And it also depends on the timing, and that you may attenuate that up. You may bring it down to 15%, or you may say, hey, we're in a little more riskier environment. Let's just put a little bit more contingency, bring it up to 22 or 23%.
Great. Okay. That makes sense. So I'll keep going through the list. I have a question here. It says, are there any new approaches that maybe we haven't discussed here to strategic planning?
Yeah, there are some new things. Like, for example, I did a little bit of reading a couple of years ago, and they talked about after your SWOT analysis, a lot of companies go into doing their goal and objective formulation, and they kind of miss something, and it's called the battle map. So what your teams should be thinking about, particularly your sales team, is get the lay of the land. What customers in the next year or two are you going to go after? And what products are you going to sell to those customers? And how are you going to get those products to them? Okay, so, and each one of either your sales team, if you're a smaller company, your sales team, or your sales and buying team, or it could be a number of teams if you're a little bit larger, and you want to ask each one of them is, let's see the battle map. Where are you going for new customers? What type of customers are they? What products do you tend to target with them? Mm-hmm. And how are you going to get it to them?
So essentially the sort of the market intelligence piece, you're saying is heavily dependent on the sales team being in the market, understanding the customer, and feeding that information back to management.
Correct.
Okay.
As you remember, one of the key success factors is how often do you visit your key customers and get that intelligence from them?
Is that something that in your experience, is typical of companies, that they have sales forces that do that naturally, or does it come from the top where it's a culture of not only selling a product and earning income that way, but actually reporting the intelligence back?
Oh, it's very critical that any type of sales effort, you need to understand what your customer is thinking. You also want to go, like, okay, so we're in the produce industry. You want to go in that produce aisle and you want to look through there, and you can even do what you call a SWOT walk. Okay, what's a SWOT walk? Okay, strength, weaknesses, opportunities, threats. Okay, so I walk into this Sobe store and I go, okay, where's the fresh direct product? Okay, I say we got this here. Okay, where's our competitor, or what do we have that we're not here? So that's where we're weak. We're not selling them maybe some of this stuff or that stuff or that item. And then I look and I says, well, what are our competitors doing? I'll take a look at it and says, well, how much are they selling our competitor's product? And can I try and estimate and work back what I think that they're paying for that product? And then I'm also looking, where's the opportunity in that grocery aisle? And by the way, what's the threats? The threats are your competitors looking at their pricing.
And so again, do you think that comes from the top down, and essentially that's a culture that's set within an organization, say this is how we do things and this is how we communicate internally about the things we're seeing in stores?
Yeah, and because what that also does is when that information comes back, that comes back to our buyers. Okay, our buyers actually get out and see a few stores as well. The sales rep should be out there a little bit more and bringing back that information, but and then the team is sharing that, so you're having a collaborative effort going on with the whole sales team.
Understood. Okay, and there's another question. I'll kind of stay here, kind of in the same theme of culture. And how exactly do you define it? I know you started with it, but what's your definition of culture?
Sure. Well, I can tell you this, that culture is about being engaged and about gratitude, about being engaged and having gratitude. So I'll give you a perfect example. Last Sunday, the majority of us here in Vancouver from Fresh Direct, we showed up for the RBC Child Run. And that's very much the BC Produce Marketing Association is very much involved with that. And we go out there, and it's not just the employees going out there. I brought my grandson, my wife, I brought a bunch of members of my family, and everybody else does the same. We get down there, we're all excited. We're taking photos of our group. We're going out for a walk or a run, and and we're all energized, and we're there to give back to the community. I think I think we raised about $25,000 on Sunday for BC Children's Hospital. So it's about gratitude and getting everyone engaged and get everyone working together. It's also about having we do barbecues in our I mean, I'll tell you right now, culture is really important because we've been through a couple of tough years, and culture is a tough thing, and we want to be authentic. We want to be there for our employees. We want everyone coming to work with a smile on their face. As I mentioned, we are having barbecues in our where our trucks come in and our near our docks, and we're going to be having our big barbecue actually coming up in August, and we also celebrate our wins, and we also celebrate every Christmas. We have our annual dinner, and at those annual dinners we also celebrate who's been with us 5, 10 years, 15 years, so, and also about being engaged. Like, so in the industry, so myself, I'm on the CPMA. Zan Chow, one of our buyers, is in the BC PMA. We have a number of staff involved in BC Food and Beverage. We have people involved in produce, Passion for Produce program. Every year we get people involved. It's exciting.
Makes sense. Yeah. So I should just say to the audience, we still have time. If you have questions, drop them in the Q&A box, or you could chat, put it in the chat directly to me. A couple more questions here. One is, does this apply to, could it apply to a division within a larger organization? And if so, does it have to align with certain corporate strategies, or how would that be managed for a specific division?
Yeah, you can do that with you want to make sure all your divisions are aligned with the total group. So yes, very much so. So like Fresh Direct is a group now, because we've acquired a number of entities here in Canada, and so yeah, we have our overall strategic plan with the senior team, but we also have, and that senior team does include members of other teams. Like, so for example, we acquired 2 years ago Islands West, and so Richard Aspton, who's the general manager, he will attend that strategic planning session, but he will also have a business planning session with his management team over in Victoria. Okay, and what they'll do is they'll make sure, because what's important is that each one of those members of that management team have their objectives, and they're all aligned, and that what they're doing is aligned with what the group is doing.
Makes sense. So what I'm hearing is, so to create a corporate strategic plan requires input from the individual division, so it goes up. The senior management will confirm what those plans are, whatever it might be, 1 year, 3 year, 5 year. Yeah. And then that is communicated back to the entire organization.
Correct.
I know. Okay, makes sense. And like I said, I'm familiar with Fresh Direct, and I think there's some strong leaders right at the top down. So I'd say leadership is critically important. And I mean, tell me if I'm wrong. Can something like this be effective without strong leadership?
No, it starts from the top. There has to be strong leadership and transparency, and the willingness to share information. So for our management teams, they see the financials right to EBITDA. It's like there's a lot of companies that don't want to share the information. Well, how can your management team effectively work towards an EBITDA target if they don't know what it is? And there's many.
True. Yeah, if you don't know where you're going, you're never going to get there, right? Something like that.
There are some owners that are very, very reluctant to do that. Well, if you want to grow past a certain point, you want to be beyond a lifestyle business, which just basically brings you a reasonable, handsome salary to the owner. If you want to build something much bigger and something with scale, you have to trust your management team. If you can't trust anyone on the management team, right down to EBITDA, they don't belong in the room. It's that simple.
Clear. Okay, two more questions. One seems like a fairly straightforward one. In terms of the market data, you mentioned, I think it was the CPMA data for the different regions. Where can the audience find that sort of information? Or more?
Stats Canada actually does provide information on grocery items, and they do update it. Not necessarily every single year, but most years they do. So whatever you're selling, whatever items you're selling, you should be able to reach out to Stats Canada and to get that information.
Very good.
Now,
okay.
I would say they have it at grocery. So
Sure.
if you're a wholesaler, you want to estimate, that after spoilage, everything else, you think about all the retailers across the country. Some retailers do better, some not do quite as good. So, rule of thumb, maybe think of 35 to 38% that you might take off in order to get to the wholesale level of the industry.
Makes sense. Okay, and then the last question I have here is about pivot. The when in a business plan would you pivot if things aren't going so well? Is there sort of a set time that you're reviewing the plan and then intentionally pivoting, or is it sort of a reaction because the plan isn't working as intended?
Yeah. Well, I think we've all been seeing pivoting happening over the last couple of years. So I can tell you this, that right before COVID hit, or right when COVID hit, it looked like a lot of food service companies were pulling back. And then all of a sudden there were these companies that were starting these home delivery, and then some restaurants were doing a home delivery as well. You had to pivot. You had to recognize that, you're not going to quite sell quite as much to certain food service companies, but there were other companies that were popping up or growing that you had to make the pivot. And then actually, as COVID's come off, you've actually seen the opposite happen. You're seeing that the bloom is a little bit off the rose with some of these home delivery companies. And you can see that there's a lot of food service companies that are really ramping up. So you have to pivot again.
Makes sense. Okay, I think that's it. We're ahead of schedule. So everybody, I suppose, gets 10 free minutes back for their day today. Joseph, thank you so much for this presentation. Really interesting. Thank you for bringing it alive with the engine and the car example. That's certainly going to stick with me. Let me know when the company barbecue is. I'll see if I could happen to be in Vancouver and stop by.
For sure.
But otherwise, thank you again, and thank you to the sponsor, Fresh from Florida. And if there are any other questions after this, follow up with Wally from the CPMA or Joseph or myself. And otherwise, that's a wrap. So thank you very much for attending and have a great afternoon.
Thank you, everyone.